Good Monday, this is Jay Brew, co-chairman of Seafried and Brew. Well, we're looking at a U.S. Treasury yield curve, and we're looking at it comparing where we were right at the beginning of the year and where we are now. And of course, we can see that we've had some vacillation in terms of the longer term area of the curve, but relatively within the short area of the curve out through that 7-year point, there's been very little change in terms of overall rates. This is even after the Fed's announcement, this most recent meeting, in terms of talking about raising short-term rates eventually. So a question came up in my mind in terms of how accurate has the FOMC members been in terms of judging interest rates and where they're headed to. So we go back to their original situation in terms of projecting interest rates to have more of that open forum in terms of them giving their thoughts to the public. And we've looked at these as part of our quarterly ALCO meeting with Dr. Ed. We like to watch to see what is each person at the FOMC thinking, but here we go back to 125.12 when they first started giving these projections. And there's two things that you can see here. One is 2012, 2013, 2014, and then the longer run projections. And what we've sat there and said is that on a longer run, the Fed does believe overall, in terms of their membership, that rates will go back up to more normal type of levels on the longer run. But for the next 3 years, back on that projection, is that here they're pegging where they think rates are going. And you can see here in 2012, 3 people felt that interest rates were actually, short-term rates were going to head up in 2012. You then look at 2013, 6 members felt that interest rates were going to start their upward move. And then in 2014, you just had 6 that thought that interest rates were going to remain at their current levels. So when we look at that projection now being in 2014, how right were the FOMC members in terms of where they think rates are going to be? Some even felt that rates were going to be approaching 3%. So once again, in terms of the Fed being able to project into the future where interest rates were going to go, is that there is a lot of difference of opinion and then what actually happened. We then moved into April of 2012, and we see a similar type situation, but now 7 people felt that interest rates were going to remain relatively where they are. And then we go into June of 2012. Once again, you still had 3 people that felt that interest rates were going to rise. But what started to move out is that on an overall basis, more people were sitting there skeptical that they were going to start going up in 2014. And then we start having a new projection where now they're looking at a 4-year time frame. And when we look at now where everybody is, it's amazing how many people now felt that rates were going to remain the same in 2014. But still, you had 6 people that felt that interest rates were going to head up. And as we're coming through 2012, it mostly holds at these type of levels. But once again, getting into 2013, 1 person felt that interest rates were going to go up. And we see that this also starts to shift in terms of the projections in 2014. So by June of 2013, only 4 people felt that interest rates were going to go up, but we still had 1 person that said they were going to rise in 2013. But when we look at 2015, is that there's only one person on the FOMC that thinks rates are going to remain at those levels. And that then shifts to two people coming into 2015, and only three people thinking 2014. And we come to the end of this past year, you had two people that thought interest rates were going to rise in 2014, and now three people that say that rates will remain the same in 2015. To the most recent, where in 2015 now two people feel that rates are going to remain the same, still the one saying that rates will rise in 2014, everyone saying that interest rates will be on a rise as we go into 2016. So we go back and we look at those projections back in 2012 in terms of how effective the FOMC beliefs were in terms of interest rates. It questions once again if we're going to see interest rates moving up, as some are now saying, in 2015 based upon where we are. And when we look at those Fed projections, is it really worthwhile judging where interest rates are going to go based upon the FOMC? This is Jay Brew, co-chairman of Seafried & Brew. Have a great week.